It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast. Once again, talking real estate news, your property news, 7 days a week. And as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. A Thursday morning, the 12th day of September, a day after the political debate between Trump and Harris. Did you watch that? It really was the greatest hits played out by Donald Trump once again. Harris talked about the new vision. She won the debate, hands down, no doubt about that. One person is acting quite presidential and the other, well, not so much. Now, back home locally, several of Perth's most popular suburbs have been flagged as high risk for property investors, appearing on a national blacklist by Positive Property. This was reported yesterday by Domain. Nearly half of the 111 no-go zones identified by the group are in Western Australia, with Perth leading the pack at 27 suburbs. The report, based on economic and housing market data, warns that some areas are vulnerable to falling property values, especially those reliant on industries like mining. And additionally, newer developments on Perth's urban fringe may face challenges due to insufficient infrastructure and potential oversupply. So that was very interesting yesterday, but let's catch up with Matthew Hughes because I'm sure that he's got a take on all of this from Capital Advisory in Perth for a look at the local property market. And good morning to you, Matthew. Yeah, so what did you make of that yesterday?
Good morning, Craig. Yeah, look, it speaks to the value of data. And looking through the list, the data has identified some suburbs that absolutely should be on that list in WA. Certainly towns like Port Hedland, which are single economic driver towns, regional towns that are purely driven by the supply and demand of rental properties. I would put that up the top of the list myself personally. But then you go down the list and you see something like Claremont or Subiaco, two of our premier suburbs, Subiaco being where our office is. It's a very tightly held, very highly regarded suburb with fantastic schools, and that's on the list. And so that's sort of, I'm always banging on about the idea of analysing data, but then overlaying local knowledge. And this is really an example of where that hasn't been applied.
Now, every time that you and I talk, there is always something happening and going on with you and the Perth property market. So what is the latest that's unfolding?
Yeah, Craig, I'm not exaggerating when I say the last few months have been the busiest of my entire career/life. We've had a lot going on personally in terms of some illness, unfortunately, in the family with my mother and my wife's mother. But then also I've been as busy as I've ever been, recruiting really hard for the team as we grow, but also building out our national model and our finance and mortgage broking division, which launches next week. So we were lucky enough to come across a former colleague of mine, actually, who was looking for a new position. And so Scott is joining us to head up that division. He's got over 20 years experience in broking, and he'll work well with our strategic planning team and our finance and portfolio structuring team, and obviously the buyer's agency team as well, to make sure we're servicing our clients' needs more holistically moving forward.
So it is a very busy time by the sound of it. Now, I want to talk about the listings in both Perth and also in other major capitals. What sort of changes are you seeing with regard to that?
Yeah, so our research team has been tracking a surge in listings across some of the biggest capitals, so Sydney and Melbourne in particular, and also Canberra. According to SQM research, Sydney's listings popped up nearly 15% in August, and Melbourne was up about 12%. The increase in listings has created more opportunities for buyers, which is good. It's easing competition, and in some cases like Melbourne, it's actually starting to soften prices. So they're all good things if you're a buyer, and may represent an opportunity in somewhere like Victoria in due course. Even in Perth, we've been chronically undersupplied for a long time, as you know, but we did see an 11% bump in listings in the last 4 weeks. So that's the first sort of sign of positivity we've seen in that particular indicator for a while. It's just 4 weeks and it remains to be seen, whether it's a trend or an anomaly, similar to what we've seen in our rental market, where we saw stock levels spike up a little bit about 6 months ago, and that plateaued our rental median price. But then they've, in the same 4 weeks where listings for sale went up, listings for rent came down by about the same percentage figure. So it is bouncing around a little bit, and I don't think it is a trend, and I don't think we're going to see a lot more stock coming to market.
Okay, and of course people are always a little bit curious, a little bit cautious when it comes to an increase in listings and just how that might impact on home buyers and investors alike in Perth.
The impact will be minimal because I think from what I can see, and I don't have any data to support this, but from what I can see, the type of listings where we've seen an increase reflects what we expected to happen in the market at this stage, where we've seen a transitioning from excessive heat in that bottom quartile of pricing moving up through the market. If you have a budget of 500,000 or 600,000 in Perth, I think the value proposition is dissipating there, but the demand from upgraders in terms of selling their homes and upgrading now that they see some stability in interest rates, that's where I'm seeing more listings in that sort of 900 up to about 2 million sort of price point. But the increase in listings in Perth, whilst the percentages, it's very similar to Sydney and Melbourne as a quantum, we're talking very different numbers. For us, it's only a few hundred extra properties. So it's not really something we've felt on the ground here as a buyer's agency team.
Now, as you mentioned, you're wanting to move into the Victoria market. Currently, though, what is your advice to those investors who are, considering either Perth or a Melbourne for their next property investment? What would that advice look like?
Yeah, this is a question we're being asked more and more often, actually. So we are starting to see a little bit of talk in the media about Victoria being the next market to attract investor attention. Probably equal amount of articles about Perth, which is confusing for the average punter out there. One of them saying that Perth's growth is going to run for another 5 to 10 years, which I read this morning, which is probably a bit bullish. I think I expect growth here to continue for at least a good 2, 3, maybe 4 years, just based on the undersupply market fundamentals. But for clients who are considering one or the other, and I think they are the two options you should be considering on a national basis, there's not too many other great options out there for investment at the moment. And then we need to layer any advice around market timing with a deep understanding of the client. So that's why when clients come through, we've got a very detailed fact find that we run through to really understand more about not just their budget and brief, but their risk profile, their cash flow profile, their desired outcomes, the timeframes in which they want to execute those desired outcomes. And how yield sensitive they are. And so if you have a client who is either yield sensitive because they don't have a large disposable income, or they do have a large income, but they are looking to build a multiple property portfolio quite aggressively, then we need to make them a little bit more yield sensitive on the brief document that we put together. And that means that WA at this stage is probably a better solution for them because the yields here are still better than most other, or certainly the 4 major capitals in the country. Having said that, Victorian yields I'm expecting to improve, given you've got such a massive sell-off at the moment from investors. That is creating more stock, and a lot of that stock is not being sold to investors but to owner-occupiers. So in due course, that will start to dry up rental stock and will probably improve yields over there. There is merit to getting in ahead of the curve, but you don't want to get in too early and be sitting around stagnant for 12 months because the opportunity cost of that can be too great if you're trying to build a portfolio quickly.
All right, so we are talking with Matthew there in Perth. We'll come back after the break and talk more about the WA market.
Every week we present so much real estate. Powerful, up-to-date news every morning from 6 a.m. Know your property with us on the Real Estate Podcast.
And right now it is time for another 30-second property tip. Let's go to Tasmania and to Lockie. Good morning, Lockie. What have you got for us this morning? I understand that it's got something to do with videos.
Whilst videos are very popular here in Launceston, I often tell my clients that I don't do videos. So what I do instead is I do FaceTime viewings with buyers. So on a video, it's difficult to simultaneously sell a property to owner-occupiers and investors and all those different sort of buyer groups. So what I do is I do FaceTime so I can sell the property to any given buyer based on what their requirements are. So if it's a family, obviously, this might be great for the kids, or if it's an investor, then I can talk more so about the return. So I find that if I'm on FaceTime with a buyer buyer and I can cover objections live rather than people making assumptions just based on the video. I find that to be really helpful.
From buying strategies, a fluctuating market, the importance of data, geographical differences, confidence in the market, rental yields. Stay informed every morning from 6 a.m.
And it is a Real Estate Thursday. Tell you what, the week, it is starting to disappear. I hope you're having a good one, no matter what sort of a start to the week you've had. Let's hope it's a positive end. And we are in Perth. We are talking with Matthew. And you did say that Melbourne is trending as a bit of a topic at the moment for investors, especially given that some may view anti-investor policies that the current government has enacted in Victoria recently.
Yeah, certainly it's becoming a trending topic, and slowly, because the market is obviously still in decline at the moment, but a lot of people see opportunity there just based on, at the most basic level, that we think it's undervalued. But if you look at the fundamentals, they're pretty sound, and the reasons for the decline are probably anomalies. They're COVID policies that people fled the state because of, or they're the tax policies you mentioned, where you've got the highest duty in the country. You've got land tax being increased for investors specifically. They're taxing vacant property owners. They're taxing short-stay Airbnb landlord owners at higher rates. So all of those have created a negative sentiment, a bit of a knee-jerk reaction for investors who are exiting the market. But I think WA is a better example to follow, where they tend to intervene less and they tend to use the carrot rather than the stick when trying to achieve their desired outcomes in the housing market.
Okay, so let's finish up this morning with interest rates and potential cuts, particularly since the US is looking more and more likely to cut the rate shortly. At least that is where the smart money is at. The question locally, of course, is do you think that the RBA might follow the same pathway and drop the rate before Christmas? Matthew, bit of a prediction here for you.
I don't want to ruin Christmas, but I think personally the idea of a rate cut this year is plausible but unlikely, especially, I don't know if you saw the governor's comments in the past 24 hours, basically saying publicly that, sorry, some people may just have to sell their homes if they can't afford to keep them, essentially is what she said. So that doesn't sound like the mindset of someone who's thinking about dropping rates in September or possibly even this year. And to be fair to her and the RBA, we haven't had the same traction as other developed companies in terms of taming inflation. And the RBA has always been very committed to seeing more progress towards their target band goal before taking any action. So I don't think it'll happen this year, but it would be a very welcome boost to probably the Victorian and the WA markets if it does.
Yeah, I'm with you. I think that is exactly right. There's not going to be any change between now and Christmas. All right, we'll wrap it up there, Matthew. Enjoy your upcoming weekend on Saturday. Thanks again for jumping on to the Real Estate Breakfast. Enjoy your Thursday.
Great to be with you again, Craig.
We are more than just a real estate podcast. Follow each week all of the main talking points and know your property.
Can you recall some clients where they were just about there, but they gave up and you thought, oh no, why did you do that? You were almost there. Perhaps the stress, the anxiety that I'm talking about, the lack of sleep, maybe it just became a little bit too sort of overwhelming for them. Have you got some of those examples that you can recall?
I can, and probably a better outcome than that, where I'd had some clients reach out probably about 2 months ago now, where they'd been trying to organise just a simple pre-approval through their lender. They come to me and they said, look, we're almost going to park this for a little bit. I said, let me have a look at it. Let me go through the process. We managed to get them a pre-approval in place in less than a week.
We connect you to the best real estate information across Australia. The Real Estate Podcast.